What's going on, everybody? Welcome to our Sunday webinar. I hope you guys all had a great weekend, and I hope you guys are ready to get into the market for this week. Make sure you have something to take some notes with. I'm actually going to be doing something that I don't normally do, and I am going to be sharing a trade. Mostly because I'm just getting into it. I literally just got into it. I'm going to show you my MetaTrader 4, show you that I have skin in the game. We're going to go over the pair. I'm going to give you my analysis on it, why I'm taking the trade. But first and foremost, before we jump into anything, welcome guys. If it's your first time here, my name is David Schinkel. I'm the CEO and founder of Positive Traders, and just make sure that you are subscribed because I do one of these webinars every single Sunday at 8 p.m. Eastern for you, just to give you my outlook. And with that being said, that is just my outlook, guys. Please don't take anything that is said on this stream as financial or investment advice. It should just be taken as educational and informational purposes only, okay? And because I don't normally share any free trades on these webinars, I mean, normally I'll share like setups, right? Like I'll go over what setups I'm interested in for the week and give some very strong recommendations. But on today's webinar, guys, or today's Sunday Outlook stream, I'm going to be giving you an exact like stop loss, an exact take profit, the exact entry that I'm in. It's a trade that I just took. I'm going to give pretty much my full breakdown on it, or as much detail as I can go into. But I'm going to keep it as short and sweet as possible for you guys. And I just cannot recommend it enough, or cannot stress it enough, that I know I always give, if you're on these, I always give that disclaimer of no financial or investment advice, but especially today that I'm giving out, or basically, I don't want to say that I'm giving out this trade, right? I don't recommend, I actually have to say this, guys, I don't recommend that you take this trade. It's just solely to be transparent with you guys, give you guys an idea. And I have to lay this out there that I am not responsible or liable at all for any losses that are incurred because you decide to take a trade based on what I give out. Okay, you have to understand that I have a very disciplined way of managing my trades. You'll actually see in just a moment here that I only risked 2% on this trade. Okay, so some of you guys like have never even like thought, like some of you guys probably are so used to risking like half of your account, or not even knowing how much you're risking, right? You're putting no stop loss, you're picking a random lot size. And if that is you, if you do not understand strict risk management and how to use the position size calculator, do not place this trade. Okay, but other than that, we're gonna go through I'm gonna go through this trade. First, and of course, though, we're going to go over the economic calendar, okay? So let me just refresh this. Unlike actually most webinars where I go over like each red folder, today I'm not going to go over every red folder because there's just too many to go through. If you scroll through this week, you'll see that pretty much every single day there's some sort of high impact news. And if you look at the different currencies from this week, it's pretty much every single currency except the Japanese yen that has something high impact for it. So you'll see high impact news for the Canadian dollar, the Australian dollar, the pound, the New Zealand dollar, even a fixed currency, the Chinese yuan, which we know affects the Australian dollar, and also trickles down to the New Zealand dollar. And then we have more pound news, more Canadian dollar news, more pound news, more Australian dollar news, a bunch of euro and CAD news and pound news on Thursday. So you can see, it's just like you should really just take it day by day. Obviously, if you're one of my students on my daily webinars, we will take this day by day and review and forecast each thing on a 24-hour basis. But just because there's so much going on this week, you personally should take it day by day, okay? So basically tomorrow, understand that there's a business outlook survey from the Bank of Canada for the Canadian dollar. Also, there's going to be minutes that's released, okay? So this is going to be the meeting minutes from the 1st of April. Okay, so we're always going to see, you can write this down if you don't have this in your notes, but for the Australian dollar, you're always going to see the meeting minutes, the monetary policy meeting minutes come out 2 weeks after the actual rate decision. Okay, so if you actually go here to April 1st, you'll see back on April 1st, there's an interest rate decision. No surprise, they kept interest rates the same. But you have to keep in mind, when that came out, there was just a rate statement and a cash rate, okay, which means obviously they choose what the interest rate decision is going to be at, and then a just very brief statement. It's nothing very in-depth, okay? The minutes is basically a transcript of that meeting, so it's almost going to be a more in-depth like regurgitation of the statement. So you really shouldn't see the meeting minutes on the Australian dollar ever create too much volatility on the Australian dollar, because pretty much the markets have already priced in what was said on the statement 2 weeks ago, and usually the minutes is just going to kind of, like I said, regurgitate that information from 2 weeks ago. So just want to point that out, okay? But that's going to be it for the economic calendar for the week. Let me see. Can I get, for some reason, guys, can you guys let me know if the... Okay, no, I just want to make sure. I'm looking at the stream on my phone and it wasn't showing anything. I wanted to make sure you guys can hear me okay. What's up to everybody in the chat? I see some people saying hi. I hope you guys all had a great weekend. I hope you guys all have your notepads and notebooks ready, or whiteboard I like. So let me grab my whiteboard actually, and let's go through what I have written down. Okay, so you'll actually notice today I don't have a lot marked off. Usually I have a ton of pairs. I mean, sometimes I only have a couple, but it's gonna be pretty short and sweet. We're just gonna be going, I think these are the most valuable, these 4 things that I have marked off. So NZD, USD, USD, Swiss franc, Euro, USD, and the dollar index, I think are just the foremost valuable things to go over. I think the rest is really fluff, okay? What's up, guys? Brian says, I can hear. Simon says, hey, dude. What's up, Simon? So on the dollar index, I just want to kind of just recap. If you guys are like a regular, okay, you're like a Positive Traders veteran, you're on these weekly outlooks on a regular basis, you'll know that last week I gave my basically long-term outlook, and it really hasn't changed. I mean, look at the dollar index for the past like 6 months. Okay, it's very clearly been trending up. Okay, this is the weekly time frame. Okay, it's been struggling, but it has been trending up. Now, let me be very clear with this. Make sure you guys are listening to me with this. Okay, because I don't want you guys to like take it in the wrong way. Okay, because I have 2 different biases. Okay, for the dollar index. Long term, okay, and when I say long term, I'm talking about within the next couple months, possibly within the next couple weeks, we should see a higher dollar index. Okay, I've talked about this inverted head and shoulders multiple times. I was already expecting the weakness back here. You can see dollar index weakness incoming. That was back on November 26th. So we expected this weakness. Now I'm expecting long-term strength. However, for this week, okay, so this is very important for you guys that are like, the intraday traders or intra-week traders. I am short-term bearish on the dollar index, okay? I'm expecting the dollar to fall throughout this week, okay, or at least a good majority of this week, okay? It's at a major level of resistance. We can actually see, so this is the daily chart of the dollar index last week. Pretty much really no movement last week. Okay, we can see where the markets opened up last week, a big bearish engulfing candle on the Sunday, and then, I think most people after a big bearish engulfing candle would have expected the dollar index to keep falling, which would have been Euro USD rising. That really wasn't the case. Dollar index actually struggled to go lower. Thursday, we can see it popped up, and then Friday, it was dragged back down. So it's really just been sideways. I mean, it's inched its way a little bit down, but I think the dollar index to me is showing just a very strong point of sellers coming into the market and just kind of this extremely strong supply zone for the dollar index, okay? So I would expect the dollar index to move lower throughout this week, okay? And so that brings me into the I guess the meat of what I want to get into, or the most value of what I want to get into, okay? Because you guys know I don't trade the dollar index, okay? Even though I can, my broker allows me to place a buy or a sell. I can actually take a CFD contract for a different trade, like a spot trade on the dollar index. I know a lot of brokers don't offer that option, and that's actually one of the reasons why I don't take that, is because with me and my team, I know that even though I have a broker that I use and I recommend to people to use because they're really good, I have over 300, almost 400 students. So all of my students are using different, obviously not all of them are using the same broker, and I know a lot of them don't use the same broker as me because they live in other countries and stuff. So I don't usually give out, I never give out signals or trades just on the dollar index, okay? So if I do give out a trade on the dollar index, what that's gonna mean is I'm doing the opposite on Euro USD, okay? So you guys just heard me sit here and say for the last 5 minutes that I'm bearish short-term on the dollar index. So what does that mean with Euro USD, right? If you're listening, you're paying attention, you understand correlations, what direction, what does that mean for USD? It means up, right? Obviously it means up, right? Euro USD does the exact opposite. Like you need to get that engraved in your head. I know probably 99% of you guys listening to this, it's like engraved in your head and you know that, but you need to like eat, sleep, and breathe that correlation. You need to understand that correlation. That is the strongest correlation in the entire foreign exchange market, okay? Is the dollar index versus the Euro USD, okay? Or the correlation or the comparison between the dollar index and the Euro USD. They have a negative 99.9% correlation, basically negative 100% correlation. When one goes up, the other goes down. When the other goes down, the other goes up. There's no sometimes, there's no, well, for an hour here, there was divergence. No, there's literally none of that. The 1 minute, the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour, the daily, the weekly, the monthly, every single time frame on the dollar index and the Euro USD are going to do the exact opposite of each other. Okay, that's how you have to understand how powerful that correlation is. Okay, it's not like let's take gold and USD CAD, right? We know gold, or you should know that USD CAD and gold tend to have a negative correlation. But you hear what I said? I said they tend to have a negative correlation. I didn't say that they have a guaranteed opposite always doing. No. It's only the Euro USD versus the dollar index that have that strong of a correlation. Okay, so understand that. That is why I put so much importance on that. Okay, so obviously Euro USD. Let me see what I have written down. Morningstar on the weekly. Okay, so you can see it right here, Morningstar on the weekly. If you don't know your chart patterns, you need to go back to baby pips. You need to go back to the basics. I'm sorry if this sounds harsh, guys, but if you don't even know how to identify, if you don't know what a Morningstar is, one of the most basic chart patterns in the market, like you shouldn't even be trading real money, straight up, okay? Until you, like, there's certain steps, there's certain levels that you need to pass, that you need to master to be able to, trade live. And if the simple, like literally candlestick patterns, guys, that falls under the uber basics. Like basics, like things that you should have memorized and down within your first 90 days of ever being introduced to Forex. That Japanese candlestick cheat sheet should just be engraved in you. You should be able to visually see all of those patterns. When somebody says Morningstar, you should know, boom, bearish candle, doji, bullish candle. Someone says evening star, bullish candle, doji, bearish candle. Someone says bearish engulfing candle, boom, you know what that is. Someone says 3 black crows. Someone says 3 white knights. Someone calls, and there's so many patterns that you need to know. Okay, but with just tying it to Euro USD, Euro USD has a very strong. So basically, the reason why you want to understand, I mean, this is really just covering the basics. I think all of you guys understand this, but the reason why you need to understand chart patterns is because it helps you identify things like reversals or continuation patterns. Now, it's not foolproof, right? Obviously, if chart patterns were foolproof, everybody would be a millionaire, right? Because anytime someone saw a bearish engulfing candle, you could short, your whole account and over leverage it, and then boom, you'd be a millionaire, right? But that's why you have to use multiple tools, right? Everything you use on the market, on the chart, is a tool, right? Even things that aren't on the chart, using your economic calendar, that is a tool. You need to have as many tools as you can under your belt. Think of yourself like a construction worker, right? It's gonna be hard for you to build a house if you only have a hammer, but if you have a hammer, a bag of nails, a screw gun, the plywood, the insulation, everything that you need, you can build that house with some structural integrity, just like building your strategy, right? How are you going to build a strategy if you only have one little thing, right? You need to have multiple tools that you can have to be able to build a sustainable strategy. Or just like a house that's built with only nails and no screws, it's just going to fall apart with wind, right? It's not gonna do very well. Sorry if that was a terrible analogy, but I think that was actually a pretty good analogy. All right. Let's see. Brian, he says there's an app called JCP that helps explain patterns. Awesome. I've never heard of that, Brian. Thank you for the value. You guys heard that? There's an app called J as in Jeffrey, C as in Charlie, P as in Papa, that helps explain patterns. I guess you could probably find that on your app store or something like that. But I mean, the easiest way is literally just go right here, go to Google, type in Japanese I mean, I already have it bookmarked, but you can type in Japanese candlestick cheat sheet on Google. It's going to be the first thing that pops up. There's a lot of different places that show this. And I know it's baby pips. A lot of people aren't a big fan of it. I mean, I'm not a big fan of baby pips. I mean, baby pips will not teach you how to trade. Baby pips is the best place to go to be introduced to the market, in my opinion. Okay, because it just is. It's like easy, kind of like kiddie, almost friendly. You know, they kind of like make like lame jokes in here, but it's not going to teach you like what you actually need to know how to trade. It's just going to teach you, you know, the basics, introduction, but nonetheless, this stuff is extremely valuable. I mean, in a way, if you only traded off the Japanese candlestick cheat sheet, it's doable. But you know, I think that there's, if you have, like I just was saying, the more tools you have, then the more opportunity you're going to find in the market. Okay, but yeah, this is the best way to find the Japanese JCP, Japanese candlestick patterns is probably what that stands for. Japanese candlesticks in the store. Awesome. Yeah, I've actually seen a couple different Forex games in the store. I've never downloaded them myself though. Okay, but anyways, guys, Euro USD, I'm expecting a buy on Euro USD. Okay, so I'm actually in a sell on USD Swiss franc, which we're going to look at in just a moment, which tends to have a negative correlation to Euro USD. So because I'm bearish on the US dollar, I basically had the option. I mean, there's a lot of different ways that you can trade dollar weakness, but I preferred USD Swiss franc because of what we're going to look at in just a moment. Okay, I'll be honest with me personally, I don't see an entry on Euro USD. If you see one, that's great. But just a couple key things to point out on Euro USD. Okay, so this is the weekly chart. This is pretty zoomed out on the weekly, and you'll notice that for pretty much like the past almost year, okay, next month will be a year that we've been in this descending channel. Okay, so it hasn't moved a whole lot, and I would expect it to probably start to move towards the upside of this descending channel, especially once we pick up momentum above 113. Okay, so this red dotted line, if you're a regular, this should be nothing new to you. This dotted line has been on here since late last year. You know, you'll notice on my charts, I don't have many, you know, I mean, I guess on this chart I have a couple trend lines, but I usually don't have a whole lot of markings on my charts. Okay, so this is pretty much the only like horizontal line that I have on my chart. It's a very significant level. We're back up to this level, and it's just as simple as that. Reversal pattern. I would expect Euro USD to probably head back towards the upside of this this channel, which would be somewhere around like 115 area, and we're at 113 right now. So that's about like about a 200 pip extension to the upside if that's the case on Euro USD. Okay. Also, just to kind of tie into some fundamental confluence as well, or some fundamental backing with this trade. If you guys have been, I mean, if you haven't, you're sleeping under a rock if you haven't been following along the Brexit news, okay? But Brexit news has been going on all year. You know, pretty much Miss May is in some deep shit. Nobody likes Theresa May right now, right? I could literally sit here and spend an hour explaining, and it honestly wouldn't even touch the surface. You know, my students will know that we've gone very in depth with Brexit on some of our daily webinars. But in short, all you need to know is that Brexit didn't happen. Great Britain, so the UK, Miss May, Theresa May, was now given until, they've given her another extension until October 31st. Okay, now that's generally speaking going to be good for, you know, the pound and the larger players in the Eurozone, like the Euro, because that gives time for, I mean, obviously, like, think about it. Like, you don't even have to, like, be a crazy brainiac or know all the fundamentals. Like, just logically think about it from like a human perspective, okay? If you're a country, okay, and you're a part of a group of other countries that are all ran under the same monetary policy, and you decide you want to leave, okay? Now, this was decided right like multiple years ago, back in like 2016. All right, some of you guys probably weren't even in the market in 2016. Well, imagine if that happened, and how would you want that to happen, right? You have citizens that live all over the place, right? And not to mention, each country has different fiscal monetary policy, okay? Or different fiscal policy. You know, they have different tax rates, which is just, I mean, we've just talked about how bad that is for the whole Eurozone as a whole. But anyways, if you as a country want to leave, you know, your group of countries that you belong to, and there's like two options, either like a nice long soft leave where you have time to get the legislation in order and you have time to figure out all the laws and all the bells and all basically the yellow tape that is going to be involved with leaving, or would you rather like come to like this timeline of disagreement where you're kind of forced to leave and there's no legislation in place? Obviously, that's not going to be the best way, right? It's going to be better if we can do what's called like a soft Brexit, okay, which allows the UK now some more time to now basically Miss May is going to come up with another plan that's going to be proposed to Parliament, the members of Parliament, the MPs, and then they're going to vote again. And then it's going to be this whole fiasco, okay? So Brexit is not done anytime soon, but all you need to know is that an extension is generally going to be good for a lot of like the euro, a lot of the bigger players that are like taking part in the saying in Brexit, which is obviously euro, and then the pound itself, okay? So that's going to give it some time. So that is some fundamental backing of why, like I say, I think maybe for the next couple of weeks, I mean, we could be really surprised. We could see, so I don't have my annotator tools because I'm on YouTube Live, but I'll do my best with these arrows. So basically, in short, if I can give a visual, this is my idea with Euro USD, something along the lines of this, okay? But price could surprise us at these highs, and we could see some sort of bull trap, basically just to fake out the market and move up higher, stop out a bunch of stops, and maybe we could move up higher, kind of similarly to what we did back in here, back in October, okay? But that's really it for Euro USD. I mean, you don't really need to be too concerned of how high will Euro USD go right now. Is it going to go up to 115? Is it going to go up to 116? Is it going to go up to 117? I'm not really too concerned about that because that's like potential opportunities for the future. A potential opportunity for right now is acting on the morning star that was created on the weekly and this bullish momentum, okay? Now, here's another reason why I like Euro USD, all right, is because of USD Swiss franc, is because I know that they have a negative correlation to each other most of the time, okay? It's not like Euro USD and the dollar index where they're the complete opposite of each other. They just tend to have a negative correlation. And I'm obviously selling USD Swiss franc, so my bias would only justly be right to be bullish on Euro USD. All right, so let me just give it to you guys, all right? So here it is. I mean, I'll say these multiple times, so write this down if you need to, but I sold USD Swiss franc right before this webinar at 1.0024 with a stop loss at 1.0054, so that is a 30 pip stop loss. And which is also going to be above, I mean, we'll talk about that in just a moment, but that's above the monthly highs and also last week's highs, which pretty much the same thing because we're at the beginning of the week or the beginning of the month. And then my take profit is 105 pips below my entry at 0.9919. Okay, so I am risking 30 pips to make 105 pips, which is an incredible risk to reward ratio, which is a 3.5 risk to reward. Okay, meaning I'm looking to make 3.5 times what I'm risking, okay? Because if you're risking 30 pips to make 60 pips, then that would be like a 2 risk reward. I really truly hope that you guys understand. I mean, it's a simple concept, but I can definitely understand. I'm not trying to like shame anybody. I'm being genuine here that I know that getting into trading, there's so many things to like wrap your head around and understand. But please, if like you're new and there's a lot of things that are overwhelming, that this is what you put the most. This and what I'm going to go over in just a moment with this tab right here that you see at the top of my screen, which is the position size calculator, that these two things you put the uttermost importance on with your trades, okay? No matter where you're selling, where you're buying at, you need to make sure that your risk to reward is good. Because if you get in the habit of doing something where you're risking like 30 pips and then you're only making like 15 pips, okay, that you are going to ultimately lose, okay? Sure, you could have like a good week, you know, maybe a good couple weeks, maybe even a good month with that type of risk to reward, but I guarantee you if your risk to reward averages out to be negative, you are not going to be a profitable trader, okay? And that is because the average trader, not the average trader, okay, let me say the average professional trader that does it for a living, because the average trader, you know, average trader loses like 95% of the time, okay? The average professional trader is going to lose about 40 to 50% of the time, meaning that they're only winning 50 to 60% of the time. Like if you guys go and look at my MyFX book, right? It's transparent. It's public records for you guys to go and look at. I'll even pull it up actually for a second. I'm not trying to toot my own horn. I'm just curious genuinely to see what my win rate is. It's probably like 55% or something like that, okay? Boom, right here. Ooh, I swear to you guys, I did not do that before I came here. It is 55%. I mean, I know because I take this is my MyFX book, my trades, my trading. I kind of know how many trades I lose already. Okay, so I win about 55% of the time. Let that sink in, guys. Okay, I'm a six-figure trader, have an extremely nice lifestyle, and I win 55% of the time. Like you tell that to most people, or not most people, but like most new people that are exposed to the market, they're gonna think that like that's impossible. But you have to. That's why you have to understand risk to reward, because it doesn't matter. I could literally, I mean, if with my risk to reward that I average, I could actually go down to like a 40 to 45% win rate and still be a profitable trader. So how crazy is that? I can actually lose more trades that I win, and so can you. Like I'm not saying this to hype myself up. Like this is something you guys can do too. You can win less trades than you lose, meaning you are losing more trades than you're winning, yet still be profitable. Okay, you have to get the psychology down. Okay, I also want to say one thing very quickly because it just came to mind. One person that I saw today. They posted this, and I'm just going to read it to you, okay? It says, technically, trading is not hard. Psychologically, it's the hardest game on the planet, okay? And I cannot stress that enough because I try to say that all the time, guys. Like, trading is not difficult, okay? Being able to identify high probability trade setups is not difficult, okay? If you are committed, you are dedicated, you are learning from the right person, you will be able to confidently, over time, you will be able to confidently identify high probability trade setups that are profitable, okay? The hardest part is being able to keep your psychology down and say, okay, even though this looks like a good trade, I'm still going to control myself, discipline myself, and use 2% risk. Literally that right there, guys, those 5 seconds that I just said is what people cannot master. Right there, not trading, not reading the charts, not technical this, technical that, and how to read this. It is none of that, guys. Like you take your average person that's been in the market, I guarantee every single one of you guys on here right now, your technical analysis probably isn't that bad. Okay, I guarantee all of you guys on here right now can probably go on your own and find high probability trade setups. On your own, without any help from me or anybody else. And you're probably saying to yourself, yeah, I can. I found that. But what is stopping you? It's the fact that when you find that high probability trade setup, you want to risk more than what you know you should risk. That right there is what mastering trading is all about. Okay? I get the question all the time. Be like, David, even if the setup looks really good, is it okay to risk? You know, what if the trade setup looks really, really good? What if it's just like it's just setting off all my alarms and everything is looking good for a sell or a buy, and I know in my heart it's gonna go up and I should just buy it and over leverage my no. That is what creates losing traders. That mentality right there. No ifs, ands, or buts about it. Just straight up, guys. Like that is what creates bad traders. That is what creates that's not what creates bad traders. That's what creates bad habits that are nearly impossible to break, which turns you into an unprofitable and losing trader because it's so hard to, basically get out of that mindset. All right, so you have to get that mindset solid, okay? So I know I just kind of just went really in depth on mindset. I just want to tie it back into this trade. So in short, obviously my students on Monday, we're going to go more in depth on this trade. Guys, this is for those of you guys that are free members that watch these on the weekly outlooks. I already do so much good on every single Sunday and as well as getting out of trade, so I'm not going to go super in depth, but basically I chose the stop loss here because it is well above the weekly and monthly highs, and I put my take profit around the previous accumulation area. Okay, if you don't know what accumulation is, well, you should probably be a student of mine to find out, but no, I don't mean to plug myself in like that, but really you should go find out what accumulation is. Okay, it's one of the understanding accumulation and distribution and order flow in the market is one of the most important things. So I'm targeting the liquidity around the previous accumulation area. Again, if you don't know what that is, go look it up. And that is why I took this trade. So 30 pips for 105 pips. I did a 2% risk. So I promised I'd show you guys this too. So I'm not... Here's another thing too, is why I think that you guys should be very careful of who you follow, because people can show you like a trade like this or like give you some nice explanation or feel, but how do you ever really know if they took the trade themselves? How do you ever really know if they have skin in the game themselves? Well, I'm going to show you right now. So here's my MetaTrader 4. Here is the trade that I'm in. Oh, I actually just took this trade. I need to set stop loss and take profit. Sorry guys, I took this literally 2 minutes before. So you guys get to see this in real time. I took this trade literally a couple minutes before, 4 minutes before starting this right now, okay? So this is literally all live for you guys. So stop loss is 30 pips away, 1.0054. And take profit is 0.9919. So we're gonna go modify, and we can see, boom, right here. So now some of you guys might be asking, okay, you see that I have a lot size of 11.34, and you see my take profit and my stop loss, but how did I figure out, how did I decide that this was 2%? Why did I, because that's a question I get a lot, like all the time on Instagram or social media when I post, if I post a trade like that I'm in profits in, I get messages all the time that are like, why the random lot sizes? And that almost makes me want to cry, because it's like so many people don't even understand why I'm using random lot sizes. And that should be such common sense. Like you should not be using the same lot size every single trade, right? If you're using like a 0.5 lot size like I'll tell you guys right now, when I see screenshots on social media of people that were like, and it's like 0.25 lots, 0.5 lots, 0.75 lots, 1 lot, I know that they didn't use risk management. They got lucky and they're posting that screenshot. Okay, but when I see someone on social media and they like took like a 2.81 lot size, and you can see that they had a stop loss set and a take profit set because it shows like either the red or the green next to the order being closed, not all the time, but most of the time, then I know that they're using proper risk management. Okay, so how I did this is I go and I look at my balance. I say, okay, the balance of this account is 100, and if you guys are wondering, look at the top. Oh, I think I need to drag this down a little bit so you guys can see. Pro live account, okay? Sorry, with the way my computer is, since I'm on a 4K computer, the screen share is a little bit weird with OBS. So just to show you guys, I don't know where the screen cuts off at exactly. So drag that down so you guys can see, because it might be cut off. But anyways, so you can see that, and you can see balance 169, 618, 77. So I literally take that number, 169, 618, 77, and I go to my position size calculator and I put in 169.68.77, and I put in the percentage that I want to risk. I put in my stop loss for my technical analysis. I put in the currency pair. That's very important because it can, it's not going to change too dramatically, but you want to be accurate, right? You want to treat trading like a business. You don't want to just treat it like this and that and leave loose ends. Okay, loose ends leads to non-profitability. And you can see, boom, lot size is 11.33. Now, some of you guys might be like, holy crap, that's such a big lot size. But, it is, like in retrospect, it is, but in comparison to the account size, where we're working with almost $170,000 account, I'm only risking 3,300, which is, it's still a lot, guys. 3,300, like I definitely care. I'm not a millionaire, guys, okay? I don't claim to be a millionaire. Like $3,300 is a lot of money to most people, including myself. But the reason why I don't have any emotional attachment, let's say if this trade was to hit my stop loss, like if this was to hit my stop loss and I was to go, first off, I don't even look at the money. Okay, I swear to you guys, when I take a losing trade, I do not go and look at how much I lost. Okay, I swear to you, like, I don't even know half the time how much I lost. What I do know is I lost whatever percentage, either 1% or 2%. I literally do not look at the money of my account. Okay, if you guys want a big tip, a big secret to like training your psychology is don't look at your account size. Like, don't look at the money whatsoever. Okay, don't look at, after each trade, don't be like, oh man, this was a losing trade. I lost, $300 or $3,000 or $30,000, whatever 1 or 2% of your account was. You can't look at it like that, because if you allow, that's just simply going to lead to emotional trading. There's nothing else that I need to say about it, okay? So guys, this is how I set up that trade. This is literally me going through a trade. Obviously, I spent like a while going over USD Swiss franc. Now, let me just add a little bit of value of why I took USD Swiss franc, okay, because I've only kind of told you why I put my stop loss where I did and my take profit. I didn't actually say why I got into this trade, and I'm going to add that right now. Let me pull up my YouTube very quickly because I pulled up a quote to read to you guys earlier. Let me make sure no one else has any questions. Good call, called out the same trade I'm watching. Awesome. Giovanni Bleak says fire. Awesome. Brian, oh, makes sense. Okay, cool. All right, so I want you guys to I want to point out just something on the chart. Okay, so I want to point now. This is not just on this chart, by the way. This one example that I'm about to point out is not like, oh, this is the one time I can find it. No, this is a very common reoccurring pattern in the market, and let me show you what it is. Oh. Dang, I don't even have a whiteboard. I was going to pull up my Zoom whiteboard and draw it all nicely for you and then show you the real world application. Basically, a very common pattern that we see in the market is anytime like there's a big push up or a big push down, and then there's some consolidation. Okay, sometimes that consolidation turns into a bull or bear flag. Sometimes that consolidation can turn into an ascending or descending channel. All right, and I just kind of want to point out what I'm talking about right here. So USD Swiss franc, we can see from the yearly highs of March, we can see that there is a big drop, okay? And then pretty much for the past 30 days, like yes, 30 days, USD Swiss franc has just been sideways in this major consolidation. And you can actually even see it better on the 4 hour. Okay, it actually looks better on the 4 hour. And you might ask yourself, is that really a month of data? And yes, it is. Like, guys, check this out. I mean, first off, you should know that USD Swiss franc is not a very volatile pair itself. But for an entire month, USD Swiss franc has been in this channel that's only about 45 pips wide. And it's just been bouncing back and forth like a pinball, like boom, boom, boom. You know, it goes up, down, up, down. You guys get it, right? Now, a very common theme with this type of setup is that we tend to see downside after the consolidation, okay? And I want to just reinforce this with a real life or a previous example on the chart that happened, just to kind of show you, for those of you guys that aren't familiar with this type of pattern, okay? So you can see back in here what I wrote even on my chart or on my whiteboard, May 9th, May 8th. So you can see, or I'm sorry, May 9, 18 is what I wrote on my whiteboard. So yeah, May 9th of 18, right here, the highs, you can see that there is this drop. And measure this consolidation, okay? This was 1 month as well. 1 month of sideways, very tight consolidation after a big, move of volatility. In this case, it was to the upside. And then what do you see after the consolidation? Boom. It obviously didn't happen overnight, right? I mean, this one did on June 14th. It shot right up, but it really didn't come back up to the top of, to the original highs until a while later. But that was still an opportunity for, 2 to 250 pips that you could have made on USD Swiss franc. And so, and again, this is not a common, this is not a one-time sort of setup. If you're familiar with the market, you've been exposed to the market for really, longer than a couple months by now, and you understand the charts, this should be a pattern that, like, in your head, maybe you don't know yet, maybe you don't know, but maybe I'm confirming your thoughts now. Maybe it's something that you've seen in the market and you're like, well, this seems to happen quite often. It seems like whenever the market does this, it does this in the future. Guys, take those notes. Like, if you have that, write it down. How are you ever going to build a strategy? Okay, a strategy is built from failures. Okay, you think some of the best traders in the world just boom learned about Forex, and then within 1 week of learning Forex, they just put together this killer strategy that just made them into the trader they are today? No, they failed and failed and failed. But you know what they did is they did what a lot of people don't, is they learned from their failures. If you are not learning from your failures in the market, if you're not learning from your losses in the market, you're going to have a really, really, really difficult time. Really difficult time. Okay, you're going to go through this vicious circle of loading an account, blowing an account, loading an account, blowing an account. 5 years down the road, you're going to be $30,000 that you lost in the market. 15. And I'm just being real with you guys, straight up. I don't even care about hurting people's feelings. Okay, because I'll just be real. I'll hurt your feelings. I don't care. Okay, because some of you guys need a wake-up call. Some of you guys are like burning through your cash. Some of you guys to this day are still not profitable, and you've been in the market for years and years. And you've probably spent $5, $10, $15, $20,000 that you just is literally just loading an account with $500 or $1,000 or $700 here and then blowing it. And going and trying to find, the grass is greener on the other side with some signal service and just taking a signal blindly and then you tell yourself you're not going to do that again. And then 2 months later, you're in that same situation. Guys, I have been there. The reason why some of you guys are probably getting goosebumps hearing this, because you're like, holy crap, is this guy like looking at me? Like, you're probably like looking around right now. But it's because I have been there, guys. Okay, I have been there. Just because I'm a professional trader, again, it doesn't mean that I was a professional trader from day one, guys. I had my fair share of struggles too. I still struggle with things on a regular basis with my trading. Okay, I am not perfect. Okay, if I was perfect, I'd be a billionaire. None of you guys would hear about me. My MyFX book would be 100% win rate. Like be real, guys. Like, nobody is perfect, but you have to learn. You have to learn from your mistakes. All right, so that is my thoughts on USD Swiss franc. Okay, so I believe that USD Swiss franc is, and sorry, I know I'm all over the place, guys. I got bad ADD, but that's just who I am. Let me say this, guys. Okay, so now some of you guys might be asking, okay, David, I see what you're saying. You see this consolidation pattern after, some major volatility, whether that's a drop or a spike. I get it. It makes sense. I've seen this before. But why do you think, or this is like you guys asking me, why do you think that this is going to be where it drops? What stops it from just consolidating and, going back up and just staying in this area? Well, I'll give you the answer that you don't want to hear. I don't, right? I'm not a mere, I don't know, I don't guarantee know that it's not going to do that, okay? But the market, like I said, it's about having as many tools as you can to be able to have like a structural strategy. And I believe from things that I'm seeing on other time frames, okay? So it actually starts on the daily here, okay? So this also goes back to the Japanese candlestick patterns that I was talking about in the beginning, okay? So this pattern right here, there's a lot of different names for it. I think Baby Pips calls it a hammer. Some people call it an inside bar. There's a lot of different names for it, but I mean, just to very quickly show you Japanese candlestick cheat sheet, and you can see, okay, I'm sorry, they call this a hanging man. Okay, I know what they are. I know what they do. All right, sorry, I got the names confused. Some of you guys probably want to call me a hypocrite because I'm saying how you want to memorize these and get these down, and then I'm getting the names wrong. But that, like, guys, like, you know what I say to people that say stuff like that? It's like the people that always focus on the small details are never going to get anywhere in life because you aren't focusing on the big picture. I don't need to know, distinguish, oh, it's a hammer, it's a hanging man. Like, I know now that I'm to where I am in the market. Maybe in the beginning, yeah, but once you're to a point with trading, you just know what it does. Okay, it doesn't even matter like what it's called. You see it, you identify it, you know what it's going to do in the future. Okay. I'm telling you guys, you people out there that like focus on the little details are gonna have a hard time in life. Okay. Nick says fraud. Yeah, I'm a fraud. I got hanging man and hammer mixed up on the webinar. Oh God, I'm a terrible trader. No, I know. So bearish hanging man. So we see this on the upside. So obviously we see that this is I'm just trying to show you guys that this is identifying a bearish reversal, okay, or a reversal pattern to show potential future. Okay, now again, with anything in the market, it's not guaranteed. Okay, it's just adding a hunch. It's like I said, you're trying to have as many tools that you can use to build up evidence in a direction of a trade. Okay, so that's the piece for me. And then also we see down on the 4 hour, I also want to show something on the 4 hour. So 4 hour was a little bit interesting at the end of last week. So Thursday, we saw this big push up on USD Swiss franc, and actually it broke the weekly highs of that time, which ended up being the weekly highs. But you can see that after that 4 hour candle, which was basically a breakout of that time, right? If you didn't know that it was going to come back down at that time, right? It spiked up. That is going to trap a lot of buyers in the market because a lot of people are going to be expecting, obviously just simple analysis. If USD Swiss franc breaks its highs, it's going to go higher. That's what they believe. And so essentially, like a lot of times what we call that is a spring, or what I like to call that is a spring, and that's just like a fake out, a spring, a bull trap, whatever you want to call it. So many names for it, but basically just a little bit of a reversal pattern in there. And then I actually ignore all of the volatility from the end of the week, okay? Like the last 8 to 12 hours of the week being open, I really ignore because there's a lot of irrational moves towards the end of the weekend. There's going to be profit taking on Fridays. On Fridays. There's going to be profit taking on Fridays. So there, yeah. All you need to know is that Friday tends to be irrational moves in the market. So if you put a lot of, or I guess I should put it this way, is I don't think that you should put a lot of importance on Friday candles. Okay. Like the close of the candle. Like if Friday made a bearish engulfing candle, I wouldn't put a lot of confidence behind a sell on a bearish engulfing candle on a Friday, okay? Because chances are it's probably just buyers taking profits before the weekend, right? And then the buyers are just going to step right back into the market on, because that's smart money. Smart money is the one that is moving the market. So if the smart money is, causing it to drop, then they're the same party that can make it go back up. So you have to understand that. All right, so guys, that's USD Swiss franc. Hopefully, my ADD is so bad sometimes, guys. I don't really give a shit. Like, that's just who I am. If I hope it makes sense to you guys. I hope you guys are following me along. There's probably some other little things in here that I'm going to go over with my students on Monday. But yeah, that's my trade. And again, I see that there's a lot more people on here than there was at the beginning. So I have to say this disclaimer, guys, that if you take I normally don't do this. Like, I can't even remember the last time that I showed an actual trade, or basically gave out a trade that I'm in with stop loss, take profit on one of these weekly webinars. I usually just keep it for my students. So with that being said, I am not responsible, zero liability to any losses if you decide to follow me with this trade. If you do, that's on you. That's great. If your analysis, but make sure that it fits your analysis, right? Don't be taking it just because I took it, right? That's the stupidest thing you can do. Don't take it just because I took it. I mean, I guess you could. I don't want to say it's like the stupidest thing, but like, I mean, the whole goal is to grow, right? Like, if it doesn't, it needs to match your analysis too. If you're looking at this and you're second guessing yourself taking a sell on USD Swiss franc, and the only reason you're considering selling it is because I said it, but to you, whatever you see in the market doesn't look good for a sell, don't sell it. I am not always right, guys. We just looked at my track record. I have a 55% win rate. I lose 45% of the time. I lose a pretty good amount of the time, but I'm still damn profitable because of the way I manage my risk and my setups. Okay, Giovanni says, who cares? Money is made. Yep, absolutely, Giovanni. Who cares about the little details when money is being made? Christian says, Euro, Yen, short scalp. I'm not interested in any Yen pairs right now, Christian. Euro, Yen, short scalp. Christian, I actually have to say that I mean, and again, I don't want this to, this is why I don't really like, I think it's good to get, some banter, some back and forth, but sometimes I think it can almost be more detrimental because I don't want to stop you from taking a trade that maybe I don't believe in, and I'll just come out and say, I don't believe that Euro Yen will move lower right now. I have such a strong bias on the Euro moving higher that it would only, like, for me personally, it doesn't make sense for me to be selling USD Swiss franc and have a bullish Euro USD bias, but then also have a have a bearish Euro Yen bias, just in my opinion. But there is a good point that the yen is a safe haven, and the Swiss franc is also a safe haven as well. So there is that confluence to Euro Yen dropping. But again, I'm coming more towards the fundamental backing. You have to keep in mind, guys, that my fundamental backing is from Brexit, right? It's from this Brexit delay. I think that that's ultimately going to find just in at least the next couple weeks. I think the euro will find strength. The euro itself. Okay. And then let me just talk about NZD USD very quickly because I just want to recap a couple of things. So NZD USD, as far as a position moving forward, I'm actually not biased on this pair. The only reason I want to cover this is because I just want to follow up and be transparent. So if you guys are in my free Telegram, all of you guys should. If you're not, click the link in the below for the free Telegram. I gave out a setup in Telegram last week, and I basically took a picture of NZD USD right about here. Right about here, somewhat like right generally in this area, and I marked off this trend line. You can literally go and look at the screenshot in Telegram, and I said something along the lines of, "It looks like more downside is coming on NZD USD." Obviously, you know, you should be able to like put two and two together. That one, I'm basically saying that if and when the support breaks, and then again, you know, we can obviously fast forward to where we are now. Let me go speed up higher, and you can see it didn't go right away, right? And that's why I don't say, like, when I post something like that, guys, like seriously, when I post something like that in Telegram, it doesn't mean like I'm not trying to hint at you guys to go and sell, just run to your MetaTrader 4 terminal and boom, just throw in a blind sell on NZD USD and just hope that Trader Dave comes through for you. No, like that is not the way that you should be taking what I give out in Telegram, guys. Like, you should be able to use your own understanding, wait for whatever you have personally for you for confirmation that you use it, okay? But anyways, just again, a recap. NZD USD did go lower like I expected, okay? So I guess I'm just kind of tooting my own horn a little bit, but just adding just like why you guys should pay attention, right? Like, I mean, you don't need to follow a million different groups to be profitable, right? This was a great setup that you could have taken on NZD USD to the downside had you have just looked at one little thing and looked for a little bit of confirmation on NZD USD. That's it. But moving forward, NZD USD, I'm not interested in right now. I think that the support that we're at right now could hold. Just because we're under the trend line, I'm actually no longer interested in selling NZD USD, at least for right now, because my bias short term on the US dollar is short. So I think that if it only makes sense that if the US dollar weakens a little bit, that we probably aren't going to go down too far on NZD USD. If anything, we're going to move up. Okay. And that is pretty much going to be it. I also don't know why I didn't have this one marked off, guys. I wanted to mark this off. By the way, the reason, if you're wondering why I have different colors, purple is for the one that I'm in. So obviously USD Swiss franc is the only one that's purple because that's the only pair I'm in. Red is pairs I'm interested in. Pound dollar, I think that we could see a buy on pound dollar this week as well. Okay, we're at a very strong level of support. We played around this level of support many times last week. And actually, me and my students, we were actually looking for a break of this support last week. Okay, we didn't take a sell. We didn't lose any money on it. We didn't, nothing like that. Okay, we didn't take any positions. But originally, my bias last week was looking for a possible sell on pound dollar on a break of this trend line. But it just doesn't look like it's happening. It looks like the support is holding. And then now that I'm seeing things with the dollar index and the dollar index is dropping, and obviously my bias on Euro USD is to the upside and USD Swiss franc to the downside, it would only make sense for pound to move lower. Plus, let me add in my Brexit fundamentals just one more time, right? Brexit being pushed back and being delayed is only going to give the pound more time, okay, the UK more time to decide on what's going to be best for both parties, okay, both the Eurozone and the UK, and allows them to get all the legislation in order and what they need. And that's going to be, at least for the short term, that's going to be good. I mean, medium term, we could even say, you know, the next week, maybe even month, or maybe, I mean, guys, it's so hard. Like, I don't want to be someone to just sit here and speculate when I have no freaking idea, you know, how long. Guys, I play it on like a day-to-day, week-to-week basis, okay? Like, I have a general idea where price is going to go. Like, you guys have seen many of my charts that I have a general idea of where price is going to go most of the time. But it's not all. I was going to pull up some examples, but it doesn't really matter. You guys have seen them before. But I would rather, I prefer a wait and see approach. Okay, let's see what we have in here. Lots and lots of comments. Brian, is there a course update? Brian, check the Telegram. There's also gonna be another update in Telegram today. Christian said, I feel you. I said scalp for a reason. Haha. I just see lower highs forming on EJ and EU right now. Lower lows and lower highs. Okay, I'm guessing if you're seeing lower lows and lower highs, you're probably talking about like the longer time frame. Or like if you're talking about lower highs on Euro Yen, then you're definitely on like the daily or the weekly time frame. But I mean, yeah, long term it is trending lower, and I mean, I still see that, right? Like my bias really hasn't shifted too much. Like I still see euro yen is in this major consolidation, but just as of where we are right now, I don't see downside on euro yen right now. Just me personally, on euro yen. Simon, can you quickly go over oil? Yeah, I can go over oil. I don't really like oil right now. I don't like USD CAD right now. Oil looks like it's going to drop. Okay, oil is pretty much showing, I mean, this is a very clear triple top right here. I mean, hold on. Let me mark off. Okay, so this green box right here, I'm going to move because that was marking off the 61.8% retracement zone, the $64 that I was originally expecting price to go to. So now let's go ahead and look at something like this. I mean, oil looks pretty textbook at this point. It looks like oil will probably head towards this area. Okay, towards this area, which is about $61.50. So I'd expect some downside on that. With that, we could probably see some upside on USD CAD, but honestly, USD CAD is just disgusting right now. Like pretty much since middle of March time when we really started to consolidate sideways, it's just been really, really nasty. I am very grateful that I've been able to catch the moves that I have on USD CAD. I've caught 3 sells on USD CAD perfectly from the top. One right here back in January 24th from the high of this correction. One up here March 29th of the correction. And then there was one like February 15th or something back in here we sold again lower. So I've been very grateful to catch these 3. But yeah, those are the 3 that I really like. Or like those are the 3 setups that I'm most fond of. As of right now, USD CAD, I just am not interested in USD CAD at all. Okay, and the reason why is because like look at that from Friday. A lot of people. This is again why I say don't put. I mean, we'll see what happens, right? I could be wrong, but this is why I say not to rely on Friday's candle, because if you're just looking at USD CAD and you're not looking at oil, you might prematurely want to sell USD CAD just because you see the daily candle from Friday just completely correct Thursday's candle, so you might find some argument to sell USD CAD, but what you should do is you should look at oil, and then you should really be saying, oh, hell no, like USD CAD definitely is dangerous to sell right now with oil, moving lower. Simon says, how would short-term USD weakness affect gold in your opinion? Well, generally speaking, USD and when the US dollar is weak, gold is stronger. Okay, and that's just a general rule of correlation with those. Top Grand says, don't treat his ideas like signals. Definitely don't treat my ideas like signals. I mean, USD Swiss franc itself is a signal. I'm sure, Top, you're probably talking about some of the other setups and ideas that I have, and that I can't stress it enough, guys. Like, this is the kind of trader I am, guys. I'm the kind of trader that like hesitates to get into it. Not hesitates in the wrong way, but I'm like extra conservative. Okay, I might have like a good looking setup, but I might not get like the entry. Let me give you an example. Let me just give you guys an example, okay? Hopefully this isn't going too off topic, but I just want some of you guys to kind of like pick my head for a little bit, okay? So NZD USD. Thursday or Friday, I posted an idea in the Telegram, right? And this was before any of the, wait, let's go back again. Like, let's just back it up for one more second, okay? So I posted when NZD USD was something like this, and I said, I'm looking for downside. Now, did I personally go and short NZD USD and just sell? No, I did not. And in fact, I didn't even take a position on NZD USD. In fact, I didn't even take a trade last week. In fact, I have not placed a trade this month except for USD Swiss franc. This trade is my first trade in 15 days, okay? The last trade that I placed was my short on USD CAD. Okay, it was my short on USD CAD on March 28th at the top right here. But I'm still in profit because for the month, I'm still up 2.5% for the month because I closed on April 1st at these lows all the way down here. Okay, so I closed in the new month, and I finished last month with 8%. Okay, so guys, this is my first trade all month. This USD Swiss franc, like that's just to maybe add some perspective of how little I trade, guys. That's how a professional does it. You talk to most professional, I mean, unless you're talking to a scalper, like somebody that sits in front of their computer with like 16 different screens and is day trading, taking 20 trades a day. There's some people that make a living doing that. There's some people that like wake up right when, you know, the London opens and boom, you know, they set their schedule around trading the London, New York. I mean, that's cool. If that's their cup of tea, they want to do that, that's great. I'm not even shaming it. Like, cool, you make a ton of money doing it. Like, keep doing it. Like, that's great. That's not for me though. Definitely is not for me. I am a quality over quantity, because I truly believe that same person sitting in front of their computer screen for freaking 16 hours a day, looking at 16 different charts, having to change their sleep schedule in their entire life just to be able to trade, I can make the same living as them doing that. Okay, and in fact, I do. Like, because I see the gurus, I see the people online that are doing it, and they aren't making a living doing it, but I am making a living doing it, and this is how I do it. Okay, you guys see it. You guys see my live accounts. You guys see my verified track records. You guys see it in real time. You can't fake a freaking $170,000 live account. How do I fake this? How do I come on here? How do I come on here and come on here and show? And yeah, you guys see, this isn't a screenshot, right? Some people might say, oh, this is a screenshot. Well, how do screenshots move the market? You know what I mean? How can I open up my market watch on a screenshot? You know, whatever, anybody can call me out on anything or ask me any question that they want, guys. I am an open book. I'm here to show you guys that there are real traders, real people freaking doing it, and we just ignore the fluff. You just ignore the BS. You stay in your own lane. You focus on you. You stay around a community of tight-knit traders that actually trade. You know, like me, I get on a webinar with my students every single, and I'm not saying like sometimes kind of when I feel like it and maybe, you know, missing 2 days a week, every other week type of thing. No, guys, I am with my students every single Monday, Tuesday, Wednesday, and Thursday. I think this entire year, I've missed one daily webinar. I don't even know if I missed a daily webinar. I might have missed one daily webinar this entire year, okay? Other than that, every single Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, religiously with my students. Okay, so that's how you have to get it. You have to get into like, you know, if you want to make a living off of trading, you have to get in a routine of looking at the charts and having some daily exposure. Okay, when the markets are open. Blossom says, any books that you can recommend? Yes, I can recommend some books. Anything by Mark Douglas is amazing. Okay, specifically Trading in the Zone. You guys need to read that book 100%. Okay, Trading in the Zone. It is going to teach you. It is going to assist you with shifting your perspective in your mindset with trading. I promise you, if you say, I guarantee every single one of you, I know I've made a lot of guarantees and promises. I know I say that a lot, but usually when I say something like that, I mean it. And I do mean this. I guarantee every single one of you guys on here, if you just set a goal, you take it seriously. If you have not, I bet you there are some of you guys on here right now that have heard trading in the zone probably 50 times for the past 2 years of your trading career. You've never even read a freaking page of it because you're too freaking arrogant and stuck in your own head that you think you can do it on your own, yet you're still blowing accounts. Go read the book. Go read. I mean, I'm not telling you that the book is like some magic money tree and you're going to learn how to make all the freaking money in the world, but I'm telling you guys that most traders struggle with mindset, and you need any tool that you can use to fix your mindset, okay? Because most traders that get into trading are either brought up with a bad mindset with trading, or don't even know what kind of mindset to have. So read Trading in the Zone, but anything by Mark Douglas is really good. I don't know who, I forget who the author is, but it's called Market Wizards. I think it's called New Market Wizards or Market Wizards. This right here, Jack D. Schwager, I don't know how. Okay, national bestseller, Market Wizards. And what this is it's really cool. It's basically a bunch of interviews with professional guys. I'm not talking like professional like me, right? I even kind of like shit on myself sometimes, right? Like I'm a professional trader, but I'm not like the shit like working like managing billions of dollars and some big baller or anything like that, right? No, like I'm a professional trader, but like on a very small level. These guys we're talking like hedge fund managers, institutional traders, these kinds of people. Like, so what other better way to learn from them but than to like listen to interviews with them? So you can actually read from them, and it's just so cool. It's just so cool. And so many people knock books, guys, but seriously, like, books have so much valuable information. You have to think about this, guys. Somebody's going to take the time to write a book. They're going to be pretty particular about the words and the value that they choose to put into that book. So you're literally like getting the knowledge, the most valuable, like that. It literally, I wish you guys could see my arms right now. I'm literally getting goosebumps thinking about this. Not just even with trading, but just books in general. Like I'm a very avid reader, guys. I am very big on personal development, mostly personal development. I read all sorts of personal development, but trading wise also. But you have to understand that like any book you read, most books you read are like with passion, right? You're learning that person. Like most people that write books also aren't young, okay, are old people. So you're getting all that old person's information in one just like go to, boom, here it is type of book. Like how awesome is that? You get like the download from these people right away, and you get like I don't know. To me, it's just so incredible that you can get like all the information from somebody that's super smart in like an easy thing. But yeah, I know that's kind of cliche, but some of you guys probably don't care about books, but that is on you. Okay. So that's Market Wizards. Those are some of the books that I recommend though to answer you, Blossoms. Both of them. Yeah, both of them. Yeah, definitely Blossoms. Like get both of them for sure. I mean, I probably shouldn't be saying this, but like, you don't necessarily have to pay for the books. There's ways on. I mean, you can find anything if you look hard enough on Google. Okay, Google has it all. If you put in the right keywords on Google and this and that, you can find the book and you can just literally read it. It's so cool if you have an iPhone or an iPad or like any sort of Apple device, you can like find the PDF version of it like online, and then you can save it to your iBooks, and then you can open it in iBooks and like read it or do whatever you want to do. And if you like audiobooks and you can't find the audiobook, guys, like use your resources. We live in the 21st century. You can take the text, okay, and you can like copy and paste it into things that'll like read it too. So if you like just absolutely hate reading and you need an audiobook and you're too cheap to go buy the audiobook for 20 bucks or 15 bucks or whatever, you can do it the super, super cheap way, okay? So I'm just saying that because there's zero excuses, literally zero excuses. You fail, that's on you. That is because of you, your own fault. I know I'm harsh. I know some of you guys probably don't like the harshness, but I really don't care. I'd rather keep it real with you guys, and it's about like your vibe attracts your tribe, right? Like if someone's gonna criticize me for being too harsh on them, it's like man up a little bit, you know, like get your panties out of the bunch, and like this is trading. This is the real world. Okay, this is really trading. You want to be successful, this is the way you do it. Okay, there's no like I'm gonna kind of do this, kind of do that. Only use risk management once in a while. I'm gonna go 20%. I'm not gonna use a position size calculator. I'm just gonna randomly throw a lot on this trade. No, you're gonna fail. All right. Physical books are always better. Yeah, I like physical books. I'll be honest though. New Market Wizards, Louis gave me, so I have a physical copy of that. But Trading in the Zone, I read online or read like a digital copy of it. But I do agree, physical books are way better. Yeah, personally for me though, with the way my brain works and it going so fast, I have to do an audio book or I won't be able to pay attention. That's it, guys. Okay, that's really all I got. So we've been on here for over an hour today. So many of you guys on here. Like, this is crazy. But I appreciate you guys. Looks like we're getting to the end here. So other than that, guys, that's going to be today's outlook. I hope you guys all had a great time today. Hope you guys all have a great trading week. If you guys have any questions, please feel free to shoot me a message on any form of social media, and I will find a time to get back to you. I've been so backed up on messages. Let me say, if you guys have messaged me like in the past week or so and I have not gotten back to you, I have been bombarded with messages, just bombarded with like life and so many things going on right now. I almost don't have enough time in the day. So remind me, shoot me another message if I haven't gotten back to you. If I accidentally left you unread, I really apologize. I did not mean to do that. But yeah, just shoot me a message and I'll get back to you. Just got to bug me a little bit. But students, I'll see you guys on tomorrow's Outlook and everybody else on tomorrow's webinar, and everybody else, I will see you guys next Sunday. So have a great trading week, guys. See you guys out there and take care.